So we have the first session for Treasury, and I would like to introduce the Treasury module, what it's about, and then would like to cover some basics like the integration of Treasury with finance, the reporting part, and the risk management part, as well as some aspects of the market data. So let's talk about the Treasury module first a little bit. Uh, so in general, what we do in finance, we work on basic modules like accounts payable, account receivable, general ledger asset accounting, which are required for day-to-day operational activities, right? For example, if someone needs to create a vendor invoice, they can use FI module to do that, and similarly for customer billing, etc. So that is more on the operational side. Now, in treasury, what we focus is more on the liquidity, cash management, investment, debt part. So what I have seen in my experience is that this is something that is not always implemented in a lot of clients. They previously what used to happen, we used to have separate license for FSCM Treasury, but now with S4 HANA, we have this as part of the finance module. So there's a lot of interest from the clients for Treasury also. So here, let's say, depending on the size of the company and the operations of the company, if a company has a lot of investments or debts, or let's say there is certain risk aspect like foreign exchange, in such cases, they implement treasury. And the advantage of using treasury is that all the month-end processes that are associated with this kind of activities can be integrated closely with accounting. You don't need to separately post a journal entry for such kind of things. You use a treasury module, and all the month-end activities, be it, let's say, let's talk about investment. Let's say I have some investment. It can be investment through a bond or equity or something like fixed deposit. In such cases, every such process will have certain month-end processes. Like, for example, they have to book the interest expense or interest income. There can be certain accruals of interest. There can be valuation in case it's a foreign currency investment. So all these activities can be also handled through treasury module. Okay. So this is what our treasury functionality can be utilized for: to record, to process, and report on debt, investment, foreign exchange. Foreign exchange, in case, let's say, you have a transaction with a foreign vendor. Let's say there is an Indian company and it is procuring some goods from China. And since it's a Chinese vendor, they have to pay back in the Chinese currency. So that also exposes the company to a certain kind of a foreign currency risk. Because let's say when I'm creating the invoice and when I'm making the payment, there can be a payment term and there can be a period of 60 days or 90 days. So in case there is a fluctuation in the currency, it puts the company to certain kind of foreign currency risks. So all this can be automated, and we can actually calculate the risk, and we can automate all these processes through treasury module. All the treasury tasks are distributed across transaction management and risk management. So transaction manager is the module which is utilized for creating different kind of products. So when I say product, what I mean is every kind of investment or loan are mapped to different types of product, which can be denoted by something called product type. The transaction manager can be used to optimize yields and cost structures. It also supports management of financial transactions and positions. So, basically, when we, let's say, in case you are doing some kind of hedging, there is also a way to utilize the transaction manager to link your hedged item and exposure. In such cases, you can also optimize the way the things are happening, and that also helps in management of the overall financial transactions, what kind of open positions you have. The SAP S4 Treasury applications helps finance department to manage financial risks, financial instruments, cash, liquidity, and payments. So basically, we'll focus on the transaction manager first, which is the basic, and then we'll cover the risk management, and then we'll move to the banking. That's how I have planned. And in between, there are a lot of other interesting things that I can show, like, for example, the integration with the accounting part, the reporting and analytics side. So we have a course structure, so we'll be sticking to that more or less. But in case I can cover something along with, so let's say when I'm covering the transaction manager, I can also cover the accounting part, right? Because if you have a deal and if you do TBB1 for the deal, automatically the accounting part, it's the interest posting or the accrual posting gets covered. So we'll be covering some of the things together, which is linked to a certain topic, and something which is like a separate topic that you can take up later. So it will be more of a flexible mode. It is nothing hard and fast. Based on the subject, we can we can choose on that.
So this electronic bank statement, banking is actually not part of the TRM module in SAP, right? It's a banking is separate where we have logbox, electronic bank statement, automatic payment program. So that's a separate, totally separate module. I would echo Partha's what he is requesting. If we can have hedging, that would be really great, as because that is part of the TRM module actually in SAP.
Yeah.
So when we TM and TRM, hedging is part of that, but electronic bank statement is not.
Yeah. So generally, what we do generally, treasury and banking go hand in hand, right? Even in treasury, also there are so many kind of payments, be it payment request kind of thing, or automatic payment program for payment request, etc. Even for investment or loan, right? So that is the reason we're also covering the electronic bank statement as part of this training. But yeah, so for hedging, as Alok also mentioned, we'll try to cover the basics. We'll try to cover some of the things which are required for the risk management side, and if you need something quite advanced, then we'll see. Because in hedging also there are so many things. Like for example, there can be automatic hedging, there can be effective test, there can be hedge accounting, there can be different types of hedge products depending on whether you do cash flow hedge or whether you do any other kind of hedge.
I think SAP support only the cash flow hedge, right?
Cash flow is more commonly used, but we can also have fair value hedge.
So that is a part of the new features like forex balance sheet hedge under that.
Right. Yeah. So balance sheet hedge again is on the balance sheet exposure part. That so I will be also covering the balance sheet exposure part. So I think we can talk about the hedging in that also. Okay. So let's talk about the benefits of using treasury and cash management. So first thing is that it helps in better and more accurate prediction of the cash impact on the company. As we know, for a company, it's quite important to stay liquid and understand what kind of impacts it has. So that is why if we have a proper control in terms of the payment, in terms of the investment loans, and if you can do proper risk management, cash forecast, then it can lead to a better prediction of the cash impact. Secondly, it facilitates better organization and effectiveness of the corporate treasury function. And also, as we know, it can help in integrated operational and enterprise finance and accounting systems, which means you don't have to think about the accounting side. Based on the treasury module, automatically the accounting entries will be posted as part of the month-end processes. So you can get all your reports and accounting along with treasury module. So these are the benefits of using treasury and cash. Okay. So before we speak about the treasury processes, let's understand about the business partner, which is the basic thing in treasury. This is actually the basic master data which is required. So some of us are familiar with the business partner, right? I guess because some of you come from SAP background, or if you want, I can explain a little bit about the business partner in case someone is not familiar. So are you guys familiar with the business partner concept?
No.
No. Okay. Okay. So basically what happens if we just talk about normal SAP, every transaction, like SAP has different kinds of data. And that data can be either transactional data or it can be master data. Transactional data is something that happens on a daily basis. Like, for example, you're creating a vendor invoice or customer billing. Those are transactional data. And master data is something that does not change very often. For example, if a company like, let's say, it's a Ford, right? It's a car company. So let's say Ford has 500 vendors. So those 500 vendors don't change very often. Maybe they can onboard one vendor once in a while. But the transactions happen on a daily basis, right? There can be vendor payments, there can be vendor invoices, there can be purchase orders, and so on. So that is how we have divided SAP data into two separate formats: transactional data and master data. So business partner is something which is a new concept in S4. Before that, we used to have separate master data, like vendor is a separate master data and a customer was separate master data. And there can be other kind of master data, like, for example, we need, like, for example, in treasury, we need something like counterparty, which is nothing but, let's say you can think of it like a financial institution, right? So if I just go to the system and show it. No, so let's just give some basics about SAP first. Let me share my screen back.
Ask a simple question
Yeah, sure.
like my expectation from this training is to learn about SAP, learn about this module. So during the course of this session, like when you provide us the training, will you consider everyone as fresher? Because that's what I'm expecting. I don't want to come across like different words which I'm not aware about. Like, is it not the practice that we'll be following throughout the session, or is it something that I have to mention every time I'm in the session?
So that is the reason actually.
Because
Background of
when I
yeah.
took the demo, that's what was communicated to me, that the session was planned in a way that the session will be carried out in a way that whether you know SAP or you don't know SAP, you will follow stuff.
Yeah, we can plan that. So that is the reason actually I asked the background of the participants because, like, for example, some participants have probably 15, 20 years of experience in SAP finance. So for them, it will be a little easier to understand things. But even for people who are not familiar with SAP, for example, someone coming with domain experience, let's say they have worked in other softwares or they have worked in the accounting side or someone is a fresher. So we'll also try to cover the basics for those people and then we'll go to the more advanced stuff because in general, what I've seen is that finance is more of a basic module, finance, MMSD. These are some of the basic modules. And then there are some niche modules, like for example, treasury is one of the niche modules. And even in SD, we have some niche modules like BizTex or CRM. So there are some modules which are more niche, right? So we'll try to cover the basics first, and then maybe we'll try to also cover some of the advanced stuff. So we can plan that accordingly, not a problem. So let's just talk a little bit about SAP first. Okay. So SAP is nothing but a ERP software. Okay. So when you say ERP, it means enterprise resource planning. Okay. So there are different types of softwares for ERP. Like we have SAP, then we have got Oracle, then Microsoft Dynamics, etc. So what we do basically with this ERP is that we try to cover the operational activities of every company. Like previously, what used to happen if there is a let's say let's talk about a big company like Ford, okay, like Ford, right, which manufacture cars. So in company like Ford, it will have different types of departments. Like it will have finance, it will have sales, it will have procurement, it will have HR, and so on. There can be different type. There can be more departments. Okay, so now previously before ERP was invented, they used to have different softwares for finance, different software for sales and procurement and HR. And they used to build interface between finance and sales, and let's say finance and procurement, finance and HR. Why integration is required? Because every company's department finally goes and do their accounting in finance because there will be impact on the finance. Let's see, if I'm procuring some goods from a vendor, I have to make payment to the vendor. If I am billing a customer, the customer will make payment and that will also impact finance. If I'm hiring 50 resources for a project, even I have to make payment for those 50 resources. That is part of HR. So every department will have impact on finance. Okay. So there used to be very costly interfaces and it was not real time. Maybe the interface has failed or something happened. In such cases, all these departments used to work in silos and they used to connect at every month end to reconcile between each other. So that's where we have discovery of something like enterprise resource planning. And this service is provided by companies like SAP, Oracle, Microsoft Dynamics, and even there are smaller players like Tally, etc. So which gives a feature, which gives such a software which is fully integrated, which means if someone is working on sales and if someone is raising a sales order and I have to deliver some goods after a certain time, I have to bill the customer, all these things will be automatically integrated to finance. And I don't have to separately check the integration aspect because everything will be fully integrated. So that is how SAP has been designed so that whenever I'm working on a certain department, all these things will be integrated. Now, again, finance itself has so many modules like finance as AP, which is accounts payable, AR, controlling, GL, tax, assets, treasury being one of them, treasury, then risk management. Again, under AP and treasury, we can cover the payment or banking part. So let's just mention banking here. So this finance itself has so many sub-modules, right? So we are talking about treasury and risk management under finance for this particular course, and also the banking part. These are the three things we are focused on. So as I was explaining, whenever we create any data in SAP, so this data can be of two types. It can be transactional data. It can be of master data. Okay. So as I was explaining, transactional data is something that doesn't change very fast. If you talk about, even we talk about treasury, like let's say you have, let's say you have taken a bank loan, right? So that loan one can be your transactional data. Let's say I have taken many loans from this bank, loan one, loan two, or I have done some investment. It can be fixed deposit. It can be even a bond. So these are all part of transaction data. Okay. Now, this actually changes very fast because let's say I'm paying back a loan or I'm taking another loan to meet certain liquidity aspect of my company. But before we talk about the transactional data, it's very important that you understand about the master data because this is something that doesn't change very fast. Because if I have relationship with, let's say, 10 banks, then those 10 banks will become my master data. That doesn't change very fast, right? But these things can actually be on a day-to-day basis, right? So this is what we are trying to focus on first. And once you understand about the business partner, then we can focus about the transactional part. So right now,
I have a
yeah.
quick question. What makes us like, I understand something that doesn't change often is a master data and something that change frequently, like transaction, day-to-day transactions, is a transactional data. But what is the deciding factor? Like, is there a rule defined how we put something as a master data or how we put something as a transactional data, or is it just based upon the experience and understanding of the data?
No, so there is I would not say rule as such, but it is more about the role of the particular data. Like for example, can you take any example of data that you can think of when you're talking about in your organization? What kind of data that you can think of? For example, let's say I'll give an example. Let's say Ford has a factory, right? And that factory has different kind of plants. So those plants on the factory, right? There can be machineries or equipments. So those machineries, equipments, those are part of the master data, right? But there can be cases where it can get a little gray. For example, let's say a lot of companies treat laptops as an asset because it is a life. So that's why it becomes a master data. But I can probably think of maybe mobile phone as an expense because I'll be just using it for let's say 6 months, or it can also be treated as an asset. So depending on the way you treat that particular item, it varies the way you are kind of treating it. It doesn't have to necessarily do with SAP as such. It is more about how you treat your accounting and the business, right? Depending that you kind of like, for example, if you have a bank, so a bank cannot be a transaction, right? So what is a transaction? So let's say whenever you do any transaction, let's say you have a friend and you just want to give him 1,000 rupees. So you're doing a 1,000 rupees transaction with your friend. So that is a transactional data, right? But let's say you're using HDFC Bank to make the payment. So HDFC Bank is something which is more of an entity, right? So that is a master data for you. So depending on what kind of item that is and how you're treating that in the accounting, that's how we kind of vary the type of data that is.
I have a question, please.
Sure. Yeah.
Is a TRM have a submodule like finance or FI, like APAR, GL, bank, or what the structure of a TRM?
So when you say structure, you mean you are talking about if you talk about AP, right? So if I ask you the same question, what is the structure of AP? How will you answer it? Yeah, you got my point, right?
No,
So
I'm asking the structure of TRM, not AP,
no,
or
no. So
what?
when you structure, can you explain the question a little more? What exactly do you mean by structure? Are you
I'm asking, here we have finance or FI module. It consists of ABAR, GL, bank assets like that. What is the submodule of TRM?
Okay,
Either
sub-modules. Okay, okay.
Okay.
So sub-modules, okay. I think that will also be covered as part of this. Okay, let's just talk a little bit about this components of S/4HANA. I think this will cover your questions also.
yes, a component, yes.
So just maybe I'll just quickly answer this question and then we'll go back to the flow. And I think then probably it will become more and more clear as we go deeper. So as I was explaining, in treasury and risk management, we cover certain types of things which are required by the companies. For example, if a company has an investment, when I say investment, it can be a simple investment like a fixed deposit, or it can be a complicated investment like security, right? For example, as Ford, I want to acquire a new company. So I want to make a joint venture with the company, or that company can be my subsidiary, or it can be an associate, or it can be that I'm buying some securities of a company from the market. It can be a fixed investment bond. It can be a instrument like a commercial paper where I'm just taking a deposit for a few days, let's say a week. Or it can be something as simple as a fixed deposit where I'm just parking some money in the bank and I'm going to take some interest income out of it. Similarly, there can be cases where it can be something like loan, where I'm taking a bank loan. So bank loan, fixed deposits, investment, all this come under something called money market, right? So money market is something which you cover as part of treasury. So this is a sub-module. Secondly, foreign exchange. So the example that I was giving. So let's say you're an Indian company and you have taken some goods from China. So you have to make the payment to the Chinese company after 3 months in their currency. It's a Chinese yuan. So in such case, you want to fix that rate that, hey, after 90 days, I want to know what will be my rate at which I'll make the payment. In that way, I have a very fixed plan and I can fix my cash management. So that is something called foreign exchange, where you create a deal with another financial institution that, hey, I am going to fix this rate between INR and CNY at this particular, say 1.6 or 2.5, whatever is the rate, I'm going to fix it. So that is something called a forward. So that is also part of the treasury and risk management. This is called foreign exchange. Derivative is something which is more of a hedging product, where I'm going to create a swap, which is part of a derivative form, right? This is a little complex. We'll discuss this later. Loan is something that we covered. Let's say you're taking a bank loan, or it can be intercompany loan, etc. What is trade finance? Trade finance is something like a letter of credit or a bank guarantee. So what happens there? Let's say you have a customer which is an export customer for you, and you don't have much trust because you'll be giving the goods to the customer, and the customer is supposed to make the payment after 90 days. But it's a foreign currency customer. You have never heard about the company, so you are a bit hesitant. In such cases, you can create a letter of credit with a financial institution that in case the customer is unable to make the payment, that institution is taking the guarantee to make payment on its behalf. So that is called letter of credit, or it can be even a bank guarantee. So that comes under trade finance. Securities are, as I explained, it can be equity or something like joint venture, subsidiary. All these things come under equity. Even bonds, right? There can be different types of bonds as well. All those things comes under securities. Then we have commodities. So there can be companies like oil company or a gold company where they want to make sure that they have fixed a price for a commodity, because some of the commodity prices vary a lot. Like, oil price. If the economy is doing well, the price shoots up. If the economy is not doing well, the price goes down. But as a company like airline company, like for example, Air India or Indigo, in such cases, I want to fix the price of the oil because I procure a lot of oil and I have requirement to take oil of millions of gallons after 2 months, and I don't want to take a risk of the oil price increasing because that will hurt my profit. So in such cases, I'll do commodity risk management. So there can be many such things like hedge management, exposure, market risk, limit management. So all these different kind of modules or sub-modules come under SAP Treasury and Risk Management. Similarly, we have got S/4HANA cash management, where we want to kind of forecast the short-term cash, right? Based on my payable, based on my receivable, investment, and loans, I want to kind of understand what is my cash position for next 7 days, next 15 days, right? So in such cases, you can use cash management for my cash forecasting or my cash flow. So this is what is all about cash management. and SAP Treasury and Risk Management. And we'll not go too much into the SAP FSCM part because that has more on the account receivable side where we have credit management or dispute or collection, where you want to make sure that you don't want a lot of exposure on your customer side, right? But this is not part of our scope. Similarly, for long-term forecast, we use something like IBP tool, integrated business planning tool, for a middle long-term forecast. We have something called BPC, business planning and consolidation, which is also used for long-term forecast. Okay, we'll again not cover all these topics because these are not part of our scope. And okay, we can also talk about the SAP in-house cache. So in-house, just to cover the basics. Again, this is also a little complex, but not very. So what happens is for in-house cache, what happens is, let's say if you're a big company and if you're a multinational company, you may have departments in various countries, right? Let's say you have an AP department in US, Canada, Mexico, China, India, many countries. And you don't want to maintain different departments in different countries for same kind of payment. Because let's say there can be cases where your vendor is common, but you are cutting different payments or checks in different AP departments of various countries. So that will add to your cost because you are spending a lot of money for the same kind of operations. And that actually is going to decrease the efficiency of your operation. That is going to be very costly for you. So in such cases, what you can do, you can set up a way of having head office and subsidiary, right? So there can be, let's say you are setting up Netherlands as your head office and you have different subsidiaries. And whenever there is any kind of payment is required by a vendor, you redirect that to the from subsidiary to head office, and the head office actually makes the payment on behalf of the subsidiary. And there is again some concept like virtual cash, where as and when the subsidiary payment is done by the head office, the virtual cash of the subsidiary goes down, and the head office is going to make the payment on its behalf. In that way, what happens is for different subsidiaries, all the operations gets controlled from a central department. There is a clear control on the liquidity, and there is also a lot of operational efficiency. It can be even done through something like shared service center. Nowadays, there's a lot of interest where different companies are setting up their shared service or GCC centers in India, right? Where they want to outsource their operations into a single shared service where all the operations can be done from a centralized place. So this is where the in-house cache actually comes into handy. We'll go into the more details later, but just to kind of give you an overall structure of what all things or operations and cash management covers. Or does it answer your question?
Yes. Thank you.
So we'll just go to the spreadsheet first. Okay, I hope this is also clear, right? So now I think you can go back to the business partner. Okay, and let me also show a business partner SAP just to come back to this. So this is the screen for a business partner. Okay, maintain business partner. The transaction code is BP. Very simple. Where we can find the business partner by different ways. It can be number, it can be name, etc. So since I know the number, I've just mentioned the number here. We just give the number and click on start here. It shows the business partner number. So just double click on this. Yeah. So now, here you will see that this particular business partner has been created in different roles. Okay. So this address and the name is common for all the roles. So what it actually shows here is that what is the title? It's a company. So I've kept company as a title. Then it's a sample bank that I've created here. What is the address of this bank? I've given all the address here. Okay. And this is the basic thing.
Hey, ZaranTech now offers SAP corporate training. That's right. Train your workforce in SAP with our comprehensive program. We offer customized courses, certified trainers, and hands-on labs for both individuals and businesses. Our standout features? Bespoke training, fully configured servers for practice, in-house materials, and a dedicated LMS. Plus, get session recordings and 24/7 support. From functional to technical modules, we have got it all. Choose ZaranTech for SAP training and watch your team excel. Learn, upskill, succeed with ZaranTech.
So now our interest is in this role called counterpart. But depending on the kind of product you're making, the rule changes actually. Okay. So in simple terms, if we just talk about SAP finance, then we have something like vendor or supplier master. So, uh, so if someone knows SAP, then they can think through that way of vendor customer, right? Where you have certain details you have to maintain for a vendor master. Like for example, if you have a vendor, you must maintain a reconciliation account number for the vendor master. So similarly, we have a certain role called counterparty, and this is required for all kind of OTC transactions. So what is OTC transactions? These are like, for example, as I mentioned, money market, like you're taking a bank loan, right? In such case, you have to create this business partner under a particular role. So when I say role, like, so this is again the S4HANA concept. Previously, let's talk a little bit about business partner. So previously, we used to have separate screen for vendor, separate for customer, separate for, let's say, a counterpart. Okay. Now, what happens? This is ECC. So, are you guys familiar with ECC? ECC is nothing but the older version of SAP. Okay. And currently, has something called S4HANA. This has been used for last 6-7 years, where S4HANA is all the companies are going for S4. So previously, when you used to have separate vendor, customer, counterparty, the main challenge was doing reconciliation, because there can be cases where the same entity can be your vendor also, it can be a customer also, and it can also be a counterparty. So in such cases, if you have three master data, then it's again a duplicate thing for you, and you also have to understand how much is the balance money that I have to actually make payment to that particular entity. So that is where we have this new concept like business partner. So which means that this entity is a partner for you, for your businesses. This entity can be created in different roles. It can, depending on the kind of business you're doing, the same business partner can be a vendor for you, can be a customer for you, or it can be even a counterpart. So counterparty is a role which is required for money market. Okay? Vendor is required, which is needed for any kind of making payments for it. Okay? And customer, again, this is needed if you want to receive payments for AR, like tracking your open items and closed items. All these things are needed when the customer role is set. And similarly, counterparty is a role which is required for treasury. Okay? So now let's go back to SAP again. So if I go to counterparty, so again here I'll be able to see all this same kind of data, which is also there in general, business partner general. This is same, but you will see there are some additional tabs here for counterparty. So now again, yeah, these are all different. Sure.
One question: does this treasury module has only one type of counterparty only, or they have a different type of rules for the treasury module?
There can be different types of rules as well. Like, let's say if you're issuing bonds, right? In such cases, you also need something like a depository bank, which
Sorry, come
means,
again? Can you repeat?
let's say if you are issuing bonds, then you need a depository bank.
Okay.
Because let's say, think of it in this way. Let's say if you invest, do you invest in share market, or have you ever invested?
Yeah.
You do, right?
For sure.
So you will have something like CDSL, right? Where it will be like a depository account for your shares.
Yes.
So similarly, for bonds or security, whenever you're creating something, you will need to have a financial institution apart from your own company, which will govern those deposits.
I get it. Okay, that's a repository of the of all the stock holdings which you are having. Okay.
Right. So depending on the kind of product that you're creating, the business partner can be an issuer, it can be a depository bank, it can be counterparty. Most common counterparty, which is used for simple money market transactions for a third party, but for complicated products, you can have depository bank or issuer as well.
Okay. And for example, if let's say a company has a certain gives a loans, fine, because I had done one of the project where they were basically issuing a loans, okay, to their franchises. Okay, it was a sort of franchise business, and they were giving. So for that also, it will be a counterparty. Like if I have to create a loan, fine. Let's say I'm running a company where I have 100 franchise, and for each franchise I give $100,000 loan to each of them to start their business. That would be created as a counterparty. Is my understanding?
Yes, That's correct. Because that is more like intercompany loan. Because you are giving loan.
It was not exactly an intercompany loan. It was a loan to a third party. I won't count as an intercompany. Intercompany is like because they are a separate party, but they are part of our business, like a vendor. You get a point?
Okay, okay. So then it's like any other external party. So for you, it's like an
Yes.
investment, right? Because you are investing money and you are giving money to that third party,
Yes, you're right.
and you're
Mhm.
expecting some kind of interest income out of it.
For sure. Yes.
Yeah,
So
so
it will be a counterparty.
it will be a counterparty. It is not exactly an investment in terms of the securities, etc. Such cases can happen for joint ventures. Let's say you're doing a joint venture with another company, and you want some kind of depository bank to come into the picture because you want to monitor that item. But here, in your case, it is more of a simple loan where you're giving it a fixed interest or floating interest, and you're expecting some kind of interest income. And then you, after a certain period, you will take the money back. After 5 years, let's say, you take the money back.
Yeah.
Go to the company code data also. Okay. So this is how a business partner looks like in SAP. And this is quite important to understand. So what happens is whenever you create any deal, right? So when I say deal, so in SAP, what we do, if I can show you, yeah, so, yeah. So this is so some of the for people who are familiar with SAP, you have something like asset master, all right. So similarly for treasury, there is something like a deal that you create. So when you say deal, this is like you are making a deal with your partner, right? In such cases, a lot of stuff in the deal can be automated based on the data that you fill in the master data. Like for example, when I'm going to create a vendor invoice, let's say I'm going to use MB60. So you will see if that particular vendor has a single account number in the master data, that vendor account number gets defaulted into your vendor invoice, right? Or the currency, etc. So similarly, even for treasury, when you're creating a deal, that is like a transaction for you, and some of the stuff gets defaulted from your business partner. So this is what I was showing you in the counterparty role for the company code data, where you will actually give details like currency. Like for example, when I'm going to create the loan or the investment, whatever kind of deal I'm going to create with this bank, what in which currency I'm going to have the deal done. Let's say you there's a possibility that with this particular bank you have more of euro loans or euro investment or dollar loans. So in such cases you should maintain the relevant currency in business partner, and you should give a relevant payment ID. So this will just show you. So so this talks about what kind of payment you are having, like whether it's a incoming payment or outgoing payment. So I denotes incoming payment and O denotes outgoing payment. So depending on whether it will be interest income or interest expense, it can be incoming or outgoing, right? And then we need to give the house bank. So, okay, I don't think everyone is familiar with the concept of house bank, right? So I think I should explain that also. Let me know if you guys are following. Otherwise, please let me know if you want me to kind of explain in more details. I can do that. So let me just give some basic concepts about bank also. Okay. So when we talk about bank, in simple terms, there can be two types of bank. One can be your house bank, and one can be your third party bank. Okay. So just mention house bank, and it's a vendor or customer, which is nothing but a third party bank. So can someone explain what is house bank and what is the difference between these two? With people who are familiar with SAP, can someone explain this?
House bank include my accounts only to transfer or to use it to pay to a vendor or receive money from customer. Vendor, when a bank vendor or a customer, a vendor in case of I take a loan or a facility, right?
Yeah, I mean, it may not be a loan or facility; it can be even a simple vendor payment, right? For example, that's pretty close. That's correct only. So let's say Ford is a company, and I have account in Citibank and account in BNP Paribas. Okay, so these two, Citibank and BNP Paribas, will become house bank for me. That means these banks are something that is my own bank. House bank is something but the company's own bank. That's why I'm saying house bank. And again, one house bank can have different account numbers. So that is a house bank. Now, vendor customer bank is something which is a third party bank. Because let's say, as Ford, I may have just two house banks, City and BNP Paribas, but I may have 500 vendors, and every vendor may have a different account. Let's say one vendor has account in Regions Bank. Another vendor may have, second vendor may have account as account in Wells Fargo, right? So, so I don't need a lot of details about this bank because they are not my banks, but I still need to maintain this bank in a basic way so that I can actually make the payment, right? So whenever any implementation happens, right, and in case you want to automate your payment, it is very crucial that you have all the bank account numbers of your vendors maintained in the vendor master data. So that is actually called vendor account or vendor bank. Similarly, it can be for customer bank. Let's say you want to automate your customer payment, right? When the bank statement reconciliation happens, depending on the account number from which you get the payment, you can identify your customer. So that is a very basic thing for reconciliation from the customer side. So similarly, you can also maintain the customer bank account numbers in the customer master data. So that is what is the basic concept of a house bank versus third party bank. Is it clear?
Yes, clear.
Third party bank, we call it as a partner bank.
Correct. Partner bank.
So multiple banks will maintain the vendor or customers. To identify each bank as a partner bank ID. So based on vendor request, we can make payment to the particular bank of the vendor or customers.
Correct. Exactly. In such case, we just need to create the bank key and we just need to give the account number in the vendor master. That is sufficient for us to handle such kind of payments. Partner bank, as you rightly mentioned. Now, here we are more concerned in Treasury when you're creating the counterparty. We are more concerned about our own house bank. Why? Because when you're creating a deal with the third party bank, in such cases, what you are more interested in is in which bank they are making the payment in case it's an interest income, and from which bank we are making the payment from in case it's an interest expense. That is something which will actually determine the GL, right? Because as we know, in house bank we have something called GL, and that will actually form the crux of your accounting entry. So that is why it is very crucial that you maintain the house bank details in the counterparty. Okay, is it clear? I don't know if people are not familiar with this, if this is clear, because this may be a little tricky, but yeah, let me know if this is clear.
We see in the company code 1710, below are coming customer and supplier.
Correct.
Whether a counterparty can be our customer or supplier also?
It can be. In our case, it is not, but it can be. Like if you see here, it's in bank role, general role, counterparty, depository, financial services, and issuer. These are the default roles that we have. Let's say you want to extend this in a vendor also. So you can do that. So you can simply just come to the general data. You can edit this and you can actually put supplier. Yeah. Supplier financial accounting. You can select this. You will go to the company code data for the supplier financial accounting. You have to maintain the reconciliation account. Okay. Let me check if I can get the reconciliation. This is a must. So this is a table for vendor master. I'm just going to pick up a reconciliation account. Show you this. So now, if I go to the display part, we have the counterparty role, and similar to that, I can also see. So counterparty role, you will be able to see here. And in case you want to see counterparty GL, you have I think somehow it is blank, but we can actually also make this mandatory for counterparty also. So anyway, so now once I've extended this, you can also see the same business partner in the supplier role. So that is possible, but not necessary, right? It's a possibility. And if it's possible, then SAP has the features to actually accommodate that.
Where these roles will be used as a counterparty as a customer and counterparty as a vendor?
So it depends on the module that you're actually working on. Like, for example, if you're working on accounts payable, then the vendor master will be used. If you're working on the account receivable and you want to kind of generate a customer billing, then the customer role will be used. If you're working on the transaction manager, counterparty will be used. Someone asked a question about the depository bank. If you're working on a bond or security, then depository bank will be used. So depending on the module that you're using in SAP, different roles will be used. So as I was explaining, right, previously in ECC, we used to have separate roles for every master data. Vendor master is separate, customer is separate, counterparty is separate. There can be other roles like credit management. You can, if you implement credit management, you can have some more things like credit limit, etc. So that can be a separate role. Now, business partner is not a new concept. Business partners there even in ECC, but business partner was used only for treasury or FSCM. But for finance, we used to have vendor and customer. But now in S4HANA, what they're saying that if you were a partner for me, if I'm doing business with you, then you are a business partner for me. It doesn't matter what kind of role you have. As in when I need a certain role for my different modules, I'll be extending this. Let's say you are a counterparty for me, okay. But let's say due to some reason, you become a vendor. Let's say you start supplying some goods for me, or you become a customer for me, right? So in such cases, I'll be extending the same business partner to a different role, and we'll start using that in our respective submodule. Okay. So coming back to the presentation, so a business partner in the role counterparty is this is probably my client. Look, just leave this. Is a contract partner in the financial transaction. The treasury BP role is used for bank, counterparty, intercompany general and company code data. So general and company code are data as we have checked, right? For company code data, are you guys familiar with company code concept? Some of you may not be, right. Company code, can someone tell what is a company code?
The company code, it's a legal entity. It's a normally in general terminology we are call it as just a company, but in SAP terminology it's called it as a company code. And this is the legal entity. We can do some financial transactions, and we can generate the P&L and balance sheet.
Correct. P&L and balance sheet. The external reporting is very important, right? If you have a need to have external reporting separate, then you can create that particular unit as a company code. And so it's a very basic concept in SAP. Company code is something which is part of our org structure. Similarly, we have plant in SAP. We have sales org in SAP. These are part of the basic enterprise structure. So people who are not familiar with SAP, I hope you guys understood it. So we have something. There is basic enterprise org structure, right? Where you have company code, plant, sales org, etc. So these are something how you organize the company. Like when you are, let's say if you want to implement SAP for the first time, let's assume there is a company which has no software at all, which just runs an Excel sheet, and you want to go and implement SAP for such a company. The first thing you have to understand is what is the reporting structure, what kind of operations they have, and how I'm going to organize the company in such a way that I can break down my reporting needs based on the CFOs or the controllers' requirement. So that's where we break it down at company code, plant, sales org level, depending on the operations. And so this is what company code data is all about. General data is something where it can be at a purchase data or sales data level, where you fill up all the details for the business partner. Okay, all treasury business partners with the external or internal will be linked to counterparty. So counterparty is a very important role when it comes to treasury. These are counterparties that are used to conduct treasury transactions and maintain a recipe S4HANA master data. Standard business rules are applicable. So again, these are nothing but these are configurations of business partner. Like these are the role names. The counterparty role name is called TR0151. Similarly, FI customer role is called FLCU00. So when you configure the business partner, we can actually select the roles during our BP numbered inch configuration. So that actually helps you when you do the transactions as an user. So whatever we spoke about, that is something even a SAP user will be familiar with. Now, as a consultant, you're also expected to know little more details around the backend configuration. Okay. So, any questions, anyone, before we proceed further? Share my screen. Bring that Excel sheet back.
You can continue like this only, or you can create one company code and show enter the process.
Company code creation is something that I will not create because
no. Just one end-to-end process will be done through one company code.
Yeah, absolutely. What I'll do only, I'll cover one deal. I'll be creating a treasury deal and we'll be checking that together. We'll be using the standard company code 1710, which has been provided by SAP. Be using that and we'll be creating a treasury deal. Okay. And in case you're interested to learn about company code and the enterprise structure or the basic, so see what happens, the basic enterprise structure and the company code creation, setting up the ledgers, for example, what kind of fiscal year you have. Like, for example, in India, we have April to March. In US, it can be Jan to December. Depends on the fiscal year or ledgers, how many currencies you want to set up. All these basic settings are covered in the module, right? This GL module, and they are responsible for all these basic settings. So I'll not be covering those basic settings because I used to do this long back, but then for last 8-9 years, I've been more focused on Treasury, FSCM, banking. But I think, maybe we can cover them in one of the previous session. I mean, if you're interested to learn more about enterprise structure, I would suggest to enroll for SAP Finance course, right? Maybe you can redirect some of the participants to the SAP Finance course for GL settings, etc. There, I think you will be getting all those things covered. Like they will create a company code, everything. But for this course, we'll be using 17 in company code, and I'll be starting with treasury deals. So that is how we'll be covering it. So let's talk about some more advantages, right? So this, if we use the treasury module, reduces the time spent by the treasurers and by the treasury department in terms of combining the data, in terms of accessing several banking portals. So this is kind of interesting because let me share my experience with one of the implementations where we had to actually train some of the CFOs and controllers who used to go and always approve in the bank portal. For example, let's say as an accountant, I am setting up certain payment instruction in the banking portal. And every time, let's say it has two levels of approval, one with the controller, one with the CFO. In such cases, the controller and the CFO have to log into the banking portal. Based on the approval amount, they can approve on the banking portal. And let's say if I'm using 5 banks, 5 house banks, I have to always log into different portals. The CFO and controllers have to spend a lot of time logging into different portals and access the payment and then approve it. Now, in SAP, if we use, let's say, bank communication management, we can actually configure pre-approved files. And if there's a single screen called BN_APP or the approval screen of the BCM where the CFOs and approvers can approve for all the banks in a single place and all the pre-approved files and go and get paid automatically in the bank. So this saves a lot of time, even not for the accountants, even for the high-level leadership, and that is very crucial for them. Produce bookkeeping entries. So as I mentioned, in case you are using treasury, all your interest payment, accruals, valuation, classification from long-term investment to short-term investment. It's a lot of things which will be automated. We have even ways to automate the standard TBV1 month-end transactions where once a deal is created, all those things automatically happen. So in that way, all the bookkeeping activities that the departments have been doing, those things can be actually done automatically. So that will save a lot of time and efforts. Even the calculation, right? Like if I have a principal, how much is my interest rate? Based on that, I have to calculate my interest, I have to calculate that accrual. So I don't have to do all those unnecessary calculations if we use Treasury. I think this information can be quite handy in case some of you are working with the consulting companies and working on RFPs and sales pitch. In such cases, you can use this information for doing some kind of sales pitch with your clients. Why you want to implement Treasury? Okay. Analyzing and solving database formulas, as I mentioned, calculations can be automatic. Information reuse of information in different platforms that can be minimized, and building important manual reports and dashboards. So once we implement Treasury and also Treasury reports are in place, we don't need to unnecessarily wait for the accountants to finish the activities in Excel sheet. They can simply use a Treasury dashboard, and the decision makings can be much faster in terms of, let's say you need some loans for some kind of liquidity crunch, you can quickly make such decisions based on the Treasury reports. So these are some of the advantages of using SAP Treasury module. We covered this. What are the components of SAP Treasury? Any questions on this? Yeah, we may cover too much of this hedge, exposure, market risk, and limit. We can cover them in some of the ongoing slides. But I hope you guys got a good idea about what you're going to cover in part of the treasury risk management modules of the components. Okay, so we'll focus on these three sub-modules: payments and bank communications, cash and liquidity, and treasury and risk management as part of our training. So here we support you with cash and liquidity efficiently across enterprise in identifying, quantifying, and managing the financial risks, and valuating the financial transactions in compliance with the national or international accounting principles. Like there is even we have provision to have different gaps. Like we can have India gap and US gap, and if the calculations are different, we can set it up accordingly. We have all those provisions in treasury, right? We have flexible reporting, and all these things are covered as part of it. So let's talk a little bit about the workstation. So again, treasury workstation is something which is again a new concept in one of the latest S4 features, where it actually gives you a central place where all the liquidity and risk can be tracked. So basically, you can think of treasury workstation like a central place which gives you access to different kind of reports in one place. Okay, basically it is integrated with different distributed business systems from which it obtains data or to which it transfers data. So yeah. So another thing we can talk about is integration aspect. Like some of the companies also use trading platforms. Like they can use FXall or Bloomberg, etc. So in such cases, we can have integration also, because what happens is, let's talk about spots and forwards, right? So maybe I'll just give some background about spots and forwards here. Okay, so we talk a little bit about this. So what happens is, let's say you have the example that I gave previously. You're an Indian company, you're procuring goods from China, and you're just trying to ensure that you get a good rate between your INR and CNY, so that you can maximize your profit. It can be a spot trade where you get it on the same day, or it can be a forward trade. So if we just talk about spots trade, so what happens? You negotiate with different banks and different institutions, and you try to get the best rate for you. So in such cases, what happens is, let's say you may not have the visibility for all the places in one. So let's say there are so many institutions and banks. How will you really know which institution is giving you the best rate? So it's not always possible, to handle them in SAP. So in such cases, there can be a lot of platforms, right? Like for example, we have got Bloomberg, we have got FXall, and there are many other platforms. Like if you go and try to check exchange rate related companies, you will see so many companies are there, right? So let's say you are using a trading platform, and you create a lot of spots based on the best deal that you get, and you don't want to again repeat those transactions in SAP, because you have already created a deal based on a best rate in that platform, in that trading platform. So in such cases, what to do? You want some kind of integration. You may want some kind of integration with SAP. In that way, what happens as when you create a deal in a trading platform, automatically you also get that deal created in SAP. So you can use SAP PI, or you can use API interfaces, etc. And you can create that kind of a platform. So in that way, what happens? It becomes an integrated system with distributed business systems from which it obtains data or it transfers the data. Okay, you don't need to really worry that, hey, I am going to do double work. I'm going to create the deals in my trading platform, and then I'm going to again make the same deals in SAP, because even there can be so many deals, right? Like for big companies, there can be maybe hundreds of spot deals that there is a team of 5 people who are doing that activity itself, because there's so many foreign exchange transactions for them. So in such cases, we can also build a workstation, and we can build a distributed system, and we can use this treasury reports for such cases. Any questions? Okay, it actually talks more about that only, on the Bloomberg and the distance. Are you guys familiar with this Bloomberg? Do you know what is Bloomberg? In India, there's a company called, not just in India, it's even used abroad, right? This is called Thomson Routers, right? This is also another company which is used for such kind of cases. So are you guys familiar with this kind of companies? Thomson Routers or Bloomberg? what they do, what is I heard someone is from the treasury domain, right? So maybe that person can speak about this kind of companies, maybe if they have used this kind of companies in their treasury experience. Any idea?
So those are trading platforms, right? Bloomberg, Thomson Router. So Bloomberg has this Bloomberg terminal, where anyone can do this share, purchase, sale, bonds, money market. Correct? It's very advanced, even Forex. So it's like, in simple terms, you think about Fidelity, Vanguard. Those are also trading platforms, but Bloomberg is very advanced. So it's mainly for
Exactly. Thank you, Sanjay. Yeah, that helps a lot. So what happens? What happens basically when you talk about SAP, right? SAP is more of a standalone system, right? It does not have any connectivity with the market. But if you talk about platforms like Bloomberg, it is well connected with the market. So that is the advantage, right? For example, let's talk about Trump. So Trump has decided to, let's say, put some tariff, and once the tariff has been put, let's say the floating rate for US shoots up. Let's say there's been some sell in the bond market, and the floating rate for the government bonds shoot up. So we know what is the market rate that is there, and I know what kind of rates that I can pick up. So the advantage of such a trading platform is that it is well connected to the market. It is tracking the rates on a daily basis, be it exchange rate, be it floating rate, etc. So now, if you want to build an advanced system, you don't want to go and so. Are you guys familiar with this transaction OV08?
Yeah, it's for exchange rates between currencies.
Exactly, exchange rate between currencies, right? So what happens? You give a date. Okay, let me just open OV08. So just yeah.
You mean when I have a connection or integration with Bloomberg, I don't need to get or update the rate in OB08, right?
Exactly. That's exactly what I was coming to. So if there is no connected system with the trading platform, in such cases, someone has to go and give these details. Like for example, if I'm creating a vendor invoice on let's say 12th of April, in such case, if the vendor invoice is in dollar and I don't know the rate, it will always check date or the day before yesterday's date. So whatever is the latest date, it will take up that date in case I'm posting invoice on date. So in case I want the exact rate between dollar and INR, I have to go and fill up this obvious rate manually in SAP. Based on that, here you have this exchange rate type, right? So depending on what exchange rate type you're configuring for your company code, let's say M is used widely in US. This is the market rate, M or market rate. So similarly, there can be different kinds of exchange rate that we have. We have ZECB for euro and so on, right? We have got different central bank rates like Central Bank of Indonesia, Thailand for different kind of rates. Now, if I don't know the rate, I have to go and create the rate manually in the system for it on a daily basis. So that is again going to waste a lot of time. We need to have a person dedicated to update the rates based on the central bank rates for different countries, and that will be an additional cost for the company. So in such cases, if you want to save some money, you actually have the option to integrate Bloomberg, and you can get something called Bloomberg tickers. And then you can actually use this Bloomberg or trading platforms to update the exchange rate, even the floating interest rate like live or UBOR automatically through integration. So these integrations can be used with SAP interfaces, and then automatically these FX rates can be exchanged on a daily basis. Okay. Similarly, that can happen for floating rates. Yeah.
Is this integration need the alliances from SAP?
Sorry.
Is this integration with Bloomberg need the alliances from SAP?
So SAP already gives a standard way of integrating with Bloomberg. So if you work with SAP PI team, then you can onboard the Bloomberg based on the Bloomberg tickers.
Sorry, can you repeat it again?
Yeah. So let me just try to show you again.
In S4HANA, it is standard process or any customization required, development required for this? For auto upload exchange rates?
It's a standard process. But in case you have a unique requirement, you want to control few things. Some controls are actually only possible through custom, but otherwise it's also possible in standard.
Okay, we have a Fury app for this.
It's not a Fury app as such, it's a program. We have standard programs which you can utilize. You have to work with SAP PI and basis team to develop this, to utilize the standard programs. Because this is not related to the users, right? This is more related to your development. Let me see if I can show you that part also.
I think go to general settings and in tools you will find trading platforms.
Is it? Check. Because there's a
Tools.
Market data.
Tools.
No, there's a market data actually.
No, here it is. Market data. Go to market data. Basic settings. Basic settings. Above basic settings.
Oh yeah, right,
Yes.
exactly. Yeah, this is under market data. Correct.
Yes.
Thanks.
Data feed. Maybe a data feed file interface.
I think it should be under master data. Yeah, under master data we have this settings for data yield curves for the Bloomberg.
Trading platform is there actually. Technical settings or table.
So there's a place where you can configure the ticker setup. So check on that ticker thing. Excellence market.
This is US country specific only, or all other countries also it will be same?
You can do for any country. Basically, there's a place to define the tickers. And once we define the okay, here I think we have only routers. Let's just check routers. Oh, this is just.
What sets ZaranTech apart in SAP corporate training? It's our unique blend of expertise and innovation. We offer customized courses tailored to each client's needs, ensuring relevant, targeted learning. Our vast trainer database brings you wisdom from the best in the field. Need resources? Access our extensive training material repository anytime. We are all about measurable results, providing detailed student metrics to track progress. And we don't just teach, we build community. Join our thriving social media network, connecting learners beyond boundaries. With ZaranTech, you are not just training, you are transforming your SAP expertise.
Instrument. Yes, instrument data source. So basically, let's say if you are working with Bloomberg, right? And if you want to configure, let's say the floating rate, in such case, you will actually get something called ticker from the Bloomberg. You will, if you work with Bloomberg, they will actually give you the tickers and you have to also get the data source. So what happens, let's say if you're working for a country, you'll have to get the website of that particular source. Let's say you get a website from the central bank. So you need to share that website with the Bloomberg team. And after a few days, you have to, once you raise a ticket with the Bloomberg team, they will give you the ticker and the data source. So based on that information to come and configure those data here. This is for the reference interest rate. There's a similar one for the exchange rate also that I have to search.
We will go through for this configuration later.
Sorry.
Configuration of integration with the Bloomberg. We will go through in upcoming session.
Yeah, we'll go through in more details. But I just wanted to show you how it looks like. How basically when I was explaining this, I just wanted to, because sometimes presentation itself becomes a little boring, right? So that's why I just wanted to.
So any customer or any company have a TRM can integrate with the Bloomberg, right?
Yes. You have to actually work with the Bloomberg. Bloomberg actually has different kind of services with you. So depending on what kind of service you're taking with Bloomberg, so depending on the trading platform service you're taking, they will give different types of service with you. And they will also support you. Let's say you're facing some issue and let's say something has failed. Depending on the type of service that you have, they will also kind of come back to you faster or a little slower, depending on the type of service you have opted for. And once you take the service, then you can get a team from the Bloomberg team, and then they will actually work with you. They will give you the tickers, and they need some data from you. As I mentioned, if you're working with a CFO of your client, then you need to get the basic details of the design that you'll be doing. Like, for example, if we talk about the exchange rate, right? Often you will see that there is a separate rate for the daily transaction, and there is a separate exchange rate for the month-end closing, right? So you need to get all the details. Like, for example, my daily transaction is probably one day earlier. The month-end closing is on the same day. So depending on the type of transaction that you will have, you can get all the details of the website, right? There can be some cases where let's say there is a separate buy rate, separate sell rate, separate average rate. You have to get that. You have to go to the website. You have to get all the details, right? For example, in India, what happens in India, if you're doing any export and import, you cannot use whatever exchange rate you want. You have to use the exchange rate that is the RBI. So RBI has given us a certain link, and you have to only use that exchange rate that is governed. Uh, Now, for your daily transactions, you still have some flexibility. But if you do a month-end closing activity, that is going to impact your valuation. Let's say you're posting some kind of unrealized gain or loss, etc. So that is more of a regulatory thing. So that is something which you have to get it from the RBI. In case of India, it can be different central banks for different countries. So once you do all those homework, where you get the exchange rate, type, you get the website, you have to work with the Bloomberg team and you have to share all the details with them. They will take few days time. They'll analyze in their system. There can be even cases where for some small country, Bloomberg doesn't even give service. It is quite rare, but even we have seen such cases. Like for Africa, some small African country, Bloomberg will not give service. So in that case, you have to do it manually itself. But most of the countries, Bloomberg will give service, like especially the large countries, they will give service. You have to get those details from the CFO and then share with them. And once they share the tickets and the instrument details, you have to go and configure them in the path that I showed based on the floating rate of the exchange rate. And you have to kind of, then you kind of make it automated, right?
Okay.
Yeah. So let's talk about the deal creation. So we can have, so once a business partner is in place, let's say bank or institutions or depository issuer counterpart, depending on the role, you create the business partner, we discuss this. Then you start creating the deal. So you create the deal based on the product type. So different type of products like loans, trade finance, swaps, equity, different types of products will have different kind of numbers. Like for example, fixed deposit can be 51A, short-term intercompany loan can be 65M. So bonds can be of different 62, or we have to actually see. So different type of deals will have different kind of product type configured in SAP. You have to use the product type to create the deal, and then you also settle the deal. So generally, depending on front office or back office, these things are being done by different teams. Let's say one team is creating the deal, which is the front office, and the team which is mid office, they are settling the deal. That means they're kind of validating whether all the details that you have entered are correct or not. Then they'll be settling the deal. Then third will be the accounting that will be done with the back office, where you actually go and post accounting. Okay. And again, if there's a security account, then you have to also create security class and security account. So again, these are some additional you have to do depending on the product that you have. Because what happens generally in case of bonds or securities, you may do purchase multiple times or you may issue bond multiple times, but your conditions of those remain same. Like the frequency of payment is only 6 months. So in such cases, you don't need to create different bonds for such cases. You just create the deal for same type of bond, convertible, non-convertible bond, and the condition. Once you fix it, then you can create different deals for the same kind of bond. So that is why we have some additional steps for security, called security. And then finally, you do the deal posting, which is the accounting part. Okay. Let's talk a little bit about hedge management, money market reports. So apart from normal transaction manager, we have something called hedge management also in SAP Treasury, where we can have hedging against your exposure. So when we say hedging, actually what we are trying to say is just okay. So 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 basically hedging is all about how much you are protecting your different types of risks, right? So before we talk about hedging, let's talk a little bit about exposure or risk that you have. So when I say exposure or risks, it actually means how. So this is more of an unknown factor that your company is exposed to, as in when you run your operations. And this can be different types of exposure, like we have FX risk, interest risk, right? So what exactly does it mean? So let's say you are a company in India and you're procuring some service from US. And in such case, you have, let's say, you have issued, let's say the US company has issued an invoice on 1st of Jan. Payment term is you need to pay on 31st of March, let's say for $1,000. Okay. So when you're creating the invoice, let's say you use something like FB60, which is a T code to create the invoice, and you book it. So let's say the company is XYZ vendor. So let's say you're creating the vendor by $1,000, and let's say you're booking an expense or GR or whatever, debit. So this is my invoice. So now what happens? Let's say at that time on 1st of Jan, you have a rate of let's say 75. So you're expecting that I'll have to pay 1,000 into 75 to this particular vendor, because this vendor is going to expect you the amount from you in dollar. But unfortunately, let's say the dollar has previously it was 75, now it has become, let's say, 85 in span of 3 months. So now when you're making the payment, okay, you still have to make the payment of $1,000. So let's say you will be XYZ vendor will debit $1,000, and let's say your bank, right? So in such cases, what happens? You still have to make $1,000 payment to this particular vendor, because for the vendor they have issued the invoice in $1,000, and now they have also they're expecting the payment in $1,000. But for you, what happens is since the rate has changed now, so you actually it was previously 75, now it is 85. So you have to pay 85 into 1,000. So you're going to pay 85,000. That means you will have a realized loss of 85,000 minus 75,000, because you have to pay this $10,000, 10,000 INR from your pocket. So this is the risk that every vendor invoice, it can same, the reverse can happen for customer billing. Let's say you are billing the customer in US in dollar, and now the dollar has reduced for you. So now you'll be receiving a lesser amount of money because the dollar has reduced. So you don't want such kind of risks on your company. This is a foreign currency risk. Similarly, what can happen? There can be floating rate risk. Is this clear to you? Then I'll move to the floating rate risk. So this is, I would say, this is kind of an interest. This is kind of a FX risk, and now we're talking about the interest risk. Is it clear to everyone? What is the risk about? We'll come with the solution also. But first, we're trying to understand what is the risk that they have. Is it clear? I hope I'm audible, right? Okay. So I hope it is clear to everyone, since everyone is kind of silent out as you. So in floating rate risk, what happens is, let's say you have taken a bank loan. You have taken a bank loan, and you have negotiated with the bank that I'll be paying you the floating rate, whatever is the floating rate of the bank. So now, when you have taken the loan, you have taken the loan on 1st of Jan, and at the time, let's say the interest was, let's say, 6%. So you had to only pay 6% as your interest expense. Okay. Somehow, due to some economic boom or whatever, after 6 months, this floating rate has become, let's say on 1st of June, the rate has become 8%. 8%. So now let's say the bank loan that you have taken is, let's say, for $20 million. That means this is the amount of the bank loan. And even 2% increase in your interest is quite heavy, right? Because it's into 0.02. So annually, you have to bear an additional expense of almost 400,000 INR, which is quite a hefty amount. And you don't want such risk, because for you have a certain plan for a project. You want to make sure that you kind of want to freeze the liquidity. In such case, you don't want such risk to your company, where there is a risk which has some kind of a variable associated with it. In such case, what you do, you'll have to, in case you're interested, right? In case you want to hedge this exposure, you can take something like an interest rate swap. Interest rate swap. And this interest rate swap, you will, let's say you take this IRS with a financial institution, and this institution is expecting the rate to go down, but you expect the rate to go up. So they're okay to have this switch done, and they are actually giving you a fixed rate of 7%. So right now, let's say you are at 6%, but they are giving you a fixed rate of 7%. But since in the future you're expecting the rate to go up, you are taking this IRS, which is from floating to fixed. So this is in what happens in hedging is that this IRS actually will become a hedging instrument. Okay, and this loan will become an exposure. So basically, what I am doing here, I am trying to hedge my exposure of a loan by a IRS, which is a hedging instrument. And we can create hedge plan to link those things. That we'll see the system later. But this is, and for this one, what is the solution? This is a solution for interest risk. Okay. So can someone tell me the solution for this FX risk? How will I really make sure that I don't overspend 10,000? How will I predict and make it fixed? Any idea on the FX risk? Any solution that you can think of?
Put a fixed rate on the beginning of the deal.
You want to fix the rate, right? Yes. So that's so. Let's say on first Jan itself, you want to fix a rate. You don't want the unpredictability of the rate, because if the rate moves very against you, right? You don't want to take any risk. You want to freeze your liquidity. So let's say now an institution, let's say Citibank is offering you that, hey, I'm going to give you a rate of 81 on 31st of March. Okay. So if Citibank is giving you a rate of 31st of March on 81 and you're expecting from 75 to 85, then you still are in profit, right? It may happen that it becomes 75 to 79. At that time, you'll be in loss. But you don't want to take any risk. For you, it doesn't matter whether you are losing the money or getting the money. For you, from the company's point of view, what is more important is that you want to freeze that risk. In the sense, you want to make sure that I know how much I'm going to spend on 31st of March. So that's why you take this deal, you create a forward, okay, and you create a deal with the bank, and in that way, you kind of freeze your risk, right? So this is what it is called hedging. So this is the basic concept of hedging, where you have some exposure and you want to hedge against that exposure. And now hedging can be of different types. Let's say in case it's very simple, you just have 5 forex invoices. You don't need to think through. You just need that, hey, I have just 5 invoices. I'll add the amount and I'll just hedge it. But there can be some scenario where there can be many ups and downs, many situations where you don't really know how much is the hedge. In such cases, you have to implement hedge management cockpit. You have to implement automatic hedging, because even the accounting treatment varies. In case it's whether it's OCI or P&L, whether there is how much is effectiveness. We'll discuss all those concepts later, but just understand that there can be different types of hedging depending on how much you really want to automate, how much is the exposure for your company. Is it, if it is few items, it can be even done manually, depending on the number of the volume of the company. It can be somewhere semi-automated, and it can be fully automated depending on the kind of transactions that you have. So there are different depths of hedging that we can discuss. Again, it's a very vast area. I have worked on certain aspects of it. So we'll see how we can cover some of the things here. Okay. So okay, let's just go back to the slides. So yeah. So I hope you got some idea about, again, balance sheet exposure. We'll discuss about balance sheet exposure. So there can be balance sheet exposure, there can be which is again slightly different from normal exposure. Okay, because generally, balance sheet exposure is all about understanding your overall exposure in terms of the vendor, asset, liability, and giving you overall picture. Okay, so I have also worked on balance sheet exposure. We'll discuss about that. There can be different types of exposure reports. We spoke about the interest rate risks, and we also spoke about the forex risks. So I hope this is clear. Any questions? Okay, so now there can be different types of money market reports. We'll cover the money market report, debt report, trade finance, fixed deposits. Similarly, there can be investment report for equity, investment hedge. All this we covered in the report. Okay, so let's talk about the activities overall. There can be term loan, debt management, money market, hedge management, equity, working capital. So these all can be different types of products. Let's just talk about, yeah. So now we have tried to again break them down to different types. Even for loan, there can be long-term loan, intercompany loan, related party loan, foreign currency loan, etc. Right? Working capital. What is working capital? Working capital is something that is very important for the company, because they have to make sure that they have enough liquidity to meet the basic needs. Let's say they have to make the payment for the employees, they have to pay their vendors on time. So how will it really meet my working capital? In such cases, you can take short-term loan. There's something called packing credit loan that is very common for export scenario. There can be financing and factoring. So financing, factoring, anyone familiar with this concept of supply chain financing? It's very interesting concept, and nowadays it's actually catching up. Like a lot of even some of the retail participants are now adopting supply chain financing. Anyone familiar with this concept?
Talking about selling that to the bank so you get the money faster.
Exactly, absolutely right. So, thanks, Sanjay. So basically, you can have cases where you have a customer bill, and that customer billing is something that will get paid after 90 days or 60 days based on the payment terms. But for meeting your working capital needs, you need the money faster. So in supply chain financing or factoring, we can actually take the not 100%, but let's say if you go to an institution, they will give 90% or 95% of that money instantly, and they will take a certain charge. Keeping 5 or 10% buffer, they can give the money instantly. So that is called supply chain financing. So in treasury, we can actually also cover supply chain financing part, where it will be automated based on the how much amount you are factoring. Then it can be linked with the account receivable also, where you can actually see how much open item is actually factored, and then you once the actual money comes, how you can actually do the automatic accounting. So those things also come under treasury. So thank you, Sanjay. Have you also worked on supply chain financing? Because it's a very rare thing. I've hardly seen people have worked on supply chain financing. Did you get a chance to work on that?
Yes.
Oh, nice. But okay.
Is
So
this AR factoring?
yes, that's AR factoring, correct. Yeah, AP financing actually is just reverse, where the vendors actually use your invoices to do their own financing. So this is even less used, because that is more on the you are just supporting the vendors in terms of their financing. Okay, and non-trade finance, non-fund based trade finance. So this actually includes your letter of credit, bank guarantee, corporate guarantee for export import kind of scenarios where, or maybe you're a very small company, maybe your head office is quite big in a different country. Let's say you're a company in Thailand and you're quite reputed there, but you're just starting out in India. You don't have much kind of a brand value. So there can be cases where the corporate or the head office is guaranteeing in case your fellow is a subsidiary, the corporate. So that is something which is corporate guarantee. And investments, again, fixed deposits, again, fixed deposits. So what we do for there can be short-term fixed deposit and medium-term and long-term. We generally treat different types of product based on that can be.
Is the bank guarantee the same letter of guarantee?
Sorry?
Is the bank guarantee the same letter of guarantee? Is there a difference?
Oh, you're talking about standby letter of credit, is it?
Sorry?
You're asking about what? Sorry, letter of
Is the bank guarantee the same letter of guarantee, or there is a difference?
No. There is some difference. So basically, letter of credit is something that we use more for export import scenario, and bank guarantee actually we use for any kind of scenario. Like bank guarantee gives you a safety in case buyer defaults or some situation arises.
Okay.
So okay. So let's also talk about what is product type. So depending on the type of product that you're actually creating, in SAP you can configure them as product type. This is a configuration actually. So for example, unsecured long-term, unsecured term 2065A, unsecured intercompany long-term 2065E. So this is created to differentiate. Let's say you want to report them separately, and you want to kind of treat them separately. The GLs can be separate, right? Because long-term loan and short-term loan, the liability account can be different. So in such cases, to control the accounting, we need to create them as different product type in treasury. Okay. Similarly, about long secured term loan, all these things are there, right? So it's a different type of products. So I have also covered here more such products: financing, ARC, short-term loan, intercompany loan, related party loan, packing credit. So the concepts remain very similar. Maybe financing and loan concepts will be slightly different, but what we're trying to show is that there are different types of product based on the type of thing that you're trying to like. This is all working capital, previous or all debt products. Similarly, we have different types of product for LC, BG, etc. So what we'll do now, we have been covering the slides for some time. Let's just jump back to the system, and we'll try to create one product to kind of showing the system how it looks like. and then again we'll jump back to the slides. Right. So any questions before I jump back to the system to show a demo of a product? Any questions?
This product type is separate document numbers are there, predetermined.
Sorry.
This product types document numbers is there, means already standard predetermined numbers are there, right?
Yes, these are all standard product types. Any other question? Okay. Okay. So let me just share my screen back. Give me a second.
Abhijit,
Yeah,
I have one question.
sure. Please.
We have taken a loan for 5 years,
Okay.
and accordingly, it appeared in the balance sheet as a long-term loan.
Right. Yes. Okay.
Now, so as of only say 8 months are pending,
Okay.
how this we will transfer long-term loan to short-term loan? So
Okay. That's a good question.
yeah,
So as we know, there is a financial regulation which asks us that whenever there is a obligation to make the payment in next 1 year, you have to classify that as a short term. So let's say in your case, you have taken a bank loan for 5 years. So let's say the loan starts from 1st of Jan 2025 to let's say 31st of December 2030, 5 years. So initially you create this loan as a long-term loan, and it will come under the long-term liability account. Now, for the first 1 year, when you're going to publish your balance sheet to the to the shareholders or the public, for that first 1 year, let's say the loan is of 500,000, then 100,000 should be coming under the short-term liability, and this 400,000 can be your long-term liability. So in such case, there's a standard transaction, TPM 15M, which actually lets you change your classification. So basically, we have a different general valuation class in configuration. This general valuation class is something that lets us choose what kind of GL to which it actually belongs to. So let's say I have selected the long-term liability in this general valuation class is 1,000, and the short term is let's say 2. So now, when we do this TP50 name transaction, at that time, there's a way, but you can give the horizon. So let's say from 1st of Jan to 31st of December, you give a horizon, and then you give your transaction number, and then you also choose the valuation class from which one to which one you want to transfer. So let's say in your case, it's from long-term valuation class to short-term valuation. Once you execute that, automatically for that period, that means from 1st of January to 31st of December, whatever is the value of the principal for that loan, that will get automatically posted. You will see your long-term liability account and your short-term liability account accounting entry gets created, where your short-term liability account will get credited by that amount in a long-term liability account will get debited. Does it answer your question? Let me share screen. Just give me a second. I'll just have some water. There is a bit of issue with my voice. I got a little cold. Share the screen back. So what I'll do now, I'll go to a transaction code called FP_create. Okay. So this is a transaction code that is very commonly used to create any type of product. There can be some individual transactions for a specific product, but we can use this common transaction for creating any kind of product. Okay. So this is the screen which actually shows all the parameters that should be used for creating a transaction. Okay.
Is this a transaction for money market products only or any transaction in DRM? Sorry?
I didn't get your question. Can you please repeat your question?
Is this a transaction for creation of any product type in money market or any product in TRM?
So this transaction is used for creating any kind of product in Treasury. It includes money market. It also includes, you can even use a foreign forward. It can be even used for creating bonds, securities, etc. So this is the common transaction that is used for creating any product in Treasury.
Okay. Okay, thank you.
So this is called FTR_create. Okay? FTR_create. So here you first have to give the company code for which you're creating the transaction, right? So let's say, as I mentioned, I'll be using 1710, which is the standard SAP company code for US. Even you guys can also use the 1710 company code. So I'm starting with a very simple product. I think most of the people here should be familiar with the fixed term deposit, which is like a fixed deposit with the bank, where you go and let's say you give some money to the bank and you expect some interest income out of that. It can be monthly, quarterly. It can even be at the end of the term. Let's say you don't want any interest income, you just want to kind of calculate it. Even that can be done. So this is the product is 51. Product is 51A. Yeah, 51A. So just you choose the product type. Then you can choose whether it's an investment or it's a borrowing. So in our case, we are actually investing. So that's where we choose 100. So company code is something that you guys are familiar with. This is like the legal entity. Product type, as we discussed, this is like what type of product you want to create. And transaction type is again under this product. What this is like a subdivision within the product, right? It's like investment or borrowing for fixed deposits, right? This is called transaction type. And then partner is something which is partner means the business partner. We discussed about business partner, right? Like business partner can be vendor, customer, counterparty. So here I'm going to, this is the same business partner that I showed you in the beginning. Yes, sure. There is a business partner that we have, and we have created. What I'll also do, I'll try to give the reconciliation account as well, so that in case any kind of accounting entry happens, it actually works correctly. So I'll just take some reconciliation account from the customer master, okay, and I'll just provide it there. So this is actually a table. So this is the transaction code that we use for viewing tables, okay. So right now I have opened the table for customer master. So I hope all of you guys are familiar with table and all those things, right? Any queries here? Any query on the table side? So basically, the table is nothing but like a database which stores all the data. So whatever you are seeing in the master data or transactional data, those things get stored in a table. So I'm just trying to refer a table called customer master company code data. This table will store all the details for the customer, and I'm going to pick up a reconciliation account from the customer master data. Okay. So I'll just give 1710 here. So these are the inputs for this table. Just execute this. So I have got 104 entries for this table. So now I'll pick up this reconciliation account and I'll put this here. I'll edit this. This is the edit button.
Are we saying bank is a customer here?
Yeah. So it depends on your design actually. But yeah, often what we do with the counterparties that we create them also as a customer. So in that way, what happens is generally when you're doing the treasury design, if you just create as a counterparty, it will create a payment request for you. But if you also extend the treasury business partner counterparty as a customer, in that case, it can actually create an open item, closed item for you. So in case you want to do payment from like F110, then it's easier for you if you create them as a customer. But if you are okay to do a payment request, and if you don't want any such open item as such, then even a counterparty role should be good enough. But here in our design, we're going to try and create an open item for us.
Okay. Yeah.
What is the reconciliation account for the bank take a loan from it?
Yeah, so this is what we're trying to actually put for this counterparty. This is currently blank. Okay. We'll try to put some value here. I don't know why this somehow is not.
One question. Is the reconciliation account here defined is different from the regular customer reconciliation account, or it's the same reconciliation?
Yeah, that's a good question actually. So what happens is, in case you do not need this business partner as a customer, then whatever settings we're doing is good enough. But there can be also cases where the same partner can be a customer for you, and it can also be a very big counterparty for you. So in such cases, what SAP does, it prioritizes a customer account over the treasury account. And there is a separate configuration called alternative reconciliation account number, where you can maintain the treasury account. In that way, what happens if you're doing a normal, let's say you're doing intercompany customer billing or some kind of thing, in such case, it will be treated as a customer. Whatever reconciliation account I'm maintaining here, that is going to be in the customer invoice. And based on the alternative reconciliation account number that we maintain in the treasury side, this is more of a configuration for treasury counterparty deals, etc. That account number will get picked up from the alternative reconciliation account number not from the business partner master.
Okay, thank you. So there is an option there. You
There's
you
a
have both the option. Okay, thank you.
Yes, I don't know. Somehow this is actually not enabled for me. We need to see, but that's fine. What we'll do for now, we'll actually proceed with the deal creation. Yeah.
So one
So,
more, Abhijit.
yeah.
So this is the investment. Actually, we will we will transfer the funds to bank for right through F111 transaction, correct?
Yes, correct.
So first we will create the payment order, then we create the actual payment to the bank. So should not this be created as a vendor, not customer?
Actually, what happens is in Treasury, we don't use vendor role for Treasury BPs. Generally, we use customer role only, and that is what SAP also recommends. And in such case, you will actually have a similar open item for customer, like the way we see open item for vendor. Similarly, we'll have open item for customer. And as and when we make again, as I mentioned, in case you don't want to create the BP as a customer, that is also possible. It creates a payment request, and you can make if the payment request configuration is in place, the account actually gets picked up from the payment request side. But in case you don't want to do F111, you want to do F110, you want to track them as an open item, then the SAP recommendation is to use this BP also as a customer, and you can track as a simple through customer and open item screen, and you can also make payments to F110.
Okay, thank you. Makes sense.
Yeah.
And these product types are configurable, or it's a predefined thing? All 51, 65, whatever you were showing, the around secured and unsecured products. These are pre-configured, or we can configure? What's the solution?
We can configure them. Some of them are pre-configured. We can change them, and you can also configure new products.
And generally, in a standard implementation, normally people, I believe SAP would have defined all possible combinations generally.
Generally, yes. They define most of the combinations, but there can be situations where you recover for a unique product, and in such case, we can also copy from a standard product and create into product.
Okay, fine. Thank you.
Sorry, but what product type control in the system? Like account determination or what?
Yes, a lot of things, not just account determination. Account determination definitely being one of the most important things. So if we just go to the product configuration, yeah. So if I just double click on this, so we'll see here, this is the product type for fixed deposit, right? And it actually shows what kind of interest calculation it happens. Like this is actual by 360 interest calculation method, and we default it based on the product type configuration. Then when you're doing the calculation of the interest, whether the starting date will be included or not, that default can happen with some product type configuration. And there can be some default settings like term category fixed, interest calculation, parallel condition, all these things can happen. So we don't generally touch a lot of things here. And calculation method you can definitely change. Let's say depending on the way the rate is based on the 360 days or 365 days, you can actually change that. But apart from that, we don't make a lot of changes to the configuration. And again, this product type is also linked to the transaction type, and transaction type will be linked to flow type. Flow type will be linked to the update type, and update type is something that you can configure through the account determination here. So I will cover them in some of the subsequent sessions, but let me quickly show you.
I'm not sure if we are supposed to ask for details now or if all of these will be discussed in detail later.
Yeah, we'll be discussing all these things. Today is just an overview session. So we're just trying to cover some of the things based on the questions and all. But I mean, we'll repeat all these things when you go to the details actually.
Okay, yeah, so this is an overview session. All things we have talked about will be discussed in details.
Yeah.
Okay.
Yes. And we'll also do some practicals where you'll have to actually do.
Okay.
And let us know if you face an issue, and then we can work on those things together. I mean, it's a long journey, right? We have got quite a few days of training. So this is just a start of that.
From the practical session will be start, right?
Yeah, practical sessions will be there. Anyway, also we showed some practicals, but yeah, let's say I'll assign some practicals to you also. Maybe that will start after one or two more class. We'll probably go for concepts, and then we'll ask you to also do some practicals from your side.
Okay, so I will save all my question or my detailed question for the next sessions.
Yes,
Okay.
yeah, sure.
Okay.
So this is how the GL account number is linked to the account symbol, and account symbol is linked to the posting specs, and then it's linked to the update. Okay, so this is very similar to the electronic bank statement configurations. If you guys are familiar with the electronic bank statement configuration, then it will be a little easier for you. We have to define the account symbol, posting specs, update types, and update types are linked to the product type, transaction type, all these things. Okay, so we'll not go into too much of details at this stage, but understand one thing: whatever product type you choose, be it short-term loan, long-term loan, etc., there is a way to link the GL account with the product type. Okay. So coming back to this deal number, so we'll just go inside. So this is how the deal actually looks like. We have company code, product type, investment. We have so many fields here. So in tomorrow's session, what we'll do is start with this deal number. We'll create one deal, and I'll show you how the deal looks like in SAP. And then from there we'll actually start the session. We'll actually create one deal. We have to fill some of the details and amount, start date, frequency. I have to explain each field to you, and then we'll actually also create one deal. And so that's how we'll start tomorrow, because we're at the top of the hour today. So any questions?
But before creation the deal, we will discuss the product type in details and the business partner in details, right?
Yeah, I mean, we also discuss business partner and product type, but if you have some more questions, we can discuss. See, right now, I don't want to go into the configuration stage. I just want you to first understand the basic concepts of treasury, how the treasury process flow looks like, and then we'll go to the configurations also.
Okay.
So I want to create a deal, and I want to show you how the deal is created, what are the things we need to create a deal. Understand the process first, then we'll go to the configuration also, or to actually configure a new product type. If you can create a new product type, you can also do some certain things on the configuration. But that's probably too early at this stage.